Asia stocks wobble as attention turns to U.S. inflation statistics. Fed outlook. Hong Kong Asian shares had been down on Tuesday as financial markets fretted approximately continual international price pressures, with investors turning their recognition this week to U.S. inflation facts and the prospects for further competitive Federal Reserve rate hikes. The sturdy U.S. jobs facts on Friday have raised the stakes for the July U.S. client expenses report due on Wednesday, especially for the Fed's coverage outlook. U.S. stocks have been suffering to hold on to profits, as the focal point actions from a strong U.S. labor marketplace to the U.S. CPI facts out later this week, ANZ analysts mentioned in a word. The precedents of reducing inflation to underpin the enlargement in home demand and sustainable jobs boom will ring loud and clean from the 2527 August Jackson Hole Symposium. Early inside the Asian buying and selling day, MSCI's broadest index of Asia-Pacific shares out of doors Japan become down 0.2%. The index is up 0.5% so far this month. U.S. inventory futures rose 0.07%. Japan's Nikkei slid 0.81% while Australian stocks have been flat. China's blue-chip CSI 300 index turned into down 0.31% in early trade. Hong Kong's Hang Seng index opened 0.12% decrease. On Monday, Wall Street closed broadly speaking flat after blockbuster jobs statistics remaining weak bolstered expectations the Federal Reserve will crack down on inflation, whilst a sales warning from chipmaker Nvidia (Nasdaq, NVDA) reminded buyers of a slowing U.S. financial system. Investors now wait for purchaser fee records on Wednesday to gauge whether the Fed might ease a bit in its inflation fight and offer a better footing for the economic system to develop. There were a few encouraging symptoms for the Fed at the expenditures front, with a New York Fed survey on Monday showing customers' inflation expectancies fell sharply in July. The Dow Jones Industrial Average rose 0.09% whilst the S&P 500 misplaced 0.12% and the Nasdaq Composite dropped 0.1%. Bonds also got a safe haven bid because of unease over Beijing's saber rattling towards Taiwan amid days of Chinese Navy physical games around the island. The yield on benchmark 10-year Treasury notes rose to 2.7517% in comparison with its U.S. close of 2.763% on Monday. The 2-year yield, which rises with traders' expectations of better Fed fund charges, touched 3.2115% compared with a U.S. close of 3.216%. The Greenback Index, which tracks the dollar towards a basket of currencies of other most important trading companions, become up at 106.37. Oil prices persevered their recent retreat after suffering the worst week since April on issues approximately stalling international call for as imperative banks keep tightening. U.S. crude dipped 0.19% to $90.59 a barrel. Brent crude fell to $96.48 in line with barrel. The upward push in the greenback changed into a setback for gold, even though it had managed to dance from the lows hit on Friday and turned into traded at $1,788.7731 according to ounce.